Good evening, traders. Adam here from Bull Logic, doing a market analysis with you. Nice little down day today. S&P finished down 0.24%. That's what we want to see for a bullish run. If we're going to make any kind of run towards these 1470 level and the 1474 level back here on these highs, we really need to consolidate, move sideways. Right now we're short-term overbought. As you can see, we had a nice bounce off that 50-day moving average, this lower trend line. We ran up quickly 3 days into the upper trend line, and that put us into overbought territory. So if we have or want any chance to actually make a run at this 1470 level and 1474 level, we're going to need to move sideways and work off these overbought conditions. That way, if we did it now, we're just going to get a pop and then a fade just because we are already overbought. The market's not going to be able to run up any further, and it's just going to be a failed breakout, and that's not what you want to see. So we do need to move sideways, get us out of the overbought territory. That way we can make another push here. What we don't want to see is just another run down into this lower level, that 1420 level, this lower trend line, that 50-day moving average. We don't really want to see that big pullback back into those levels. That's going to be continuing the downtrend. So if we're going to break this uptrend, now is going to be the perfect time to do it. So that's what we want to see, consolidation sideways and then a push higher. Looking at the Russell 2000 today, not a bad day. Was down a little bit more, 0.64%. It was already more overbought than the S&P because it's had a bigger run up than the S&P. As we've been saying, we're probably going to see a nice little range being formed in here between that 830 level and that 850 level. So we're going to have to see if we can't continue to bounce along in there and keep support on that 50-day moving average. NASDAQ had a horrible day today, down 1%. As you see, this was a lot more of a painful chart just because it was pushed into that 20 and the 50. It wasn't really breaking through it like we saw in the S&P and the Russell, and today just really told the story. Now, of course, this is all coming from the massive Google spike. So hopefully you weren't long Google today as they pre-released their earnings through kind of a flub, I guess, of whoever's supposed to release their earnings. They released it early. They came out bad. They got halted when they went down 10%, and they slowly bought their way back up about 2% into the close, but still down 8% on bad earnings. This is what brought the NASDAQ down. This is a horrible thing. You don't really want to see this. This is going to be very hurtful come tomorrow. I would expect a lot more red in the markets just because Google's getting hurt. It's going to bring down Apple a little bit. Again, these charts were very weak. We were pulling back into this neckline. This is a good place to short, as we were talking about yesterday. And today we're down 1.86%. These pullbacks in the neckline is just a retest in a replace to short. So I would expect us to test these 623 levels, maybe before earnings. So we're going to have to wait and see because they are next week. Amazon also, same thing. A nice bear flag into the 50-day moving average. Good place to short, good risk reward area. And as you see, it's down 1% today. I would expect a lot of these to come down into tomorrow just because of the pain NASDAQ is going to feel from Google and things like IBM also getting hurt on the earnings. All these stocks are really not being helpful to this trade. Remember, we're talking about S&P needs to get the push from the financials and the technology. Well, financials have been doing good, as you can see, but technology, on the other hand, has been really hurting this market's run up. Again, down 1% today, bear flagged right into that 50-day moving average. Look for it to take out that 29 level come tomorrow. I'm actually expecting a down day in tomorrow in the S&P and the markets just because we are getting a lot of poor news as it comes to earnings. IBM, Microsoft missed today. Chipotle missed today. It was down 10% after hours. Google, obviously, bad earnings. So all these earnings are just, it's going to create a little bit of worry here going into next week as we really start to hit like Netflix and Amazon and all those and really kick off the earnings season full tilt. So we should see a little bit more worry just because we are not getting good earning reports right now. We also have option expiration come tomorrow, so definitely something to watch out for. Option expiration is usually a very choppy day. Options get really weird. People close in and roll in and, changing out their trades. It gets a little weird in the market, so it could be a choppy day. I try to get a little relaxed on the day for trading. Not too many positions. Don't want to go into the weekend with too many positions. I believe there's Spain news coming out. Somebody correct me if I'm wrong on that one. So there could be a little bit tick in volatility coming up going into the weekend just because I do believe there is news coming out. So I am going to take it pretty easy tomorrow. Put on a couple trades, maybe here and there, just to see what's going to happen, but nothing too serious, no big positions, and not too many positions, either long or short, and I'm definitely not going to look to hold anything overnight. All right, everyone, good luck on your Friday. Enjoy the weekend. We'll talk to you Sunday night with our market analysis.